Good morning, everyone, and a very big welcome to you all. Thank you so much for attending our webinar today on the American Rescue Plan Act of 2021. On March 11, 2021, President Biden signed into a new law, which is the American Rescue Plan Act. With this, $1.9 trillion were introduced, which allocates new funds to help the struggling businesses. As the businesses and individuals are trying to overcome and manage the impact of the pandemic 19, the new American Rescue Plan Act of 2021, which is popularly known as the ARP, provides a relief to the businesses and the individuals in the form of tax breaks, funding opportunities, and expanded credits like the employee retention credits and more. Today, our excellent panel will provide you an overview of the new and the expanded COVID-19 benefits available under this recent legislation. If at any time during this webinar you have any questions, please feel free to post them at the chat window. We've got a great panel of experts today who will share their knowledge on this new legislation. We have Sukhpal Hundal, partner and CPA at our Newark office, California. Satya Reddy, CPA based in Reston, Virginia. Hansa Patel, Senior Tax Accountant and CPA at our Los Angeles office, California. And Neha Karnwal, Senior Tax Accountant, Los Angeles. So now let's jump into the webinar. Hansa, there are some exciting expansions for the unemployment benefits under the new legislation. Please, can you tell us what they are about?
Thank you, Bhakti, for the introduction. Good morning, everyone, and thank you for joining us for this webinar. So under the ARP Act of 2021, unemployment benefit has extended and it will provide an additional $300 per week from March 14, 2021 to September 6, 2021. This benefit is also available to independent contractor, part-time workers, and gig workers with the 79 weeks cap. Generally, unemployment benefits are always taxable for federal tax purposes, but this new act allows first 10,200 unemployment benefit received in 2020 will become tax-free for federal purpose if individual earn the less than 150,000. This 150,000 income limit is same for all taxpayers regardless of their filing status. Back to you, Bhakti.
Thank you so much, Hansa. So Hansa, the stimulus payments were also approved under the ARP. Can you share your details on that, please?
So under ARP, approximately 89% of taxpayers became eligible for a third round of a stimulus check in the amount of $1,400 per eligible individual. The legislation provides the stimulus payment for all dependents in the household. It doesn't have an age limit. IRS has already started sending the payments. Most of the taxpayer has already received it by this time. So who is eligible for this third stimulus? The taxpayer are eligible for full stimulus payments when they earn less than 75,000 for a single filers, 112,500 for head of household filers, and 150,000 for a joint filers. And it started to be phasing out entirely at 80,000 for single taxpayer, 120,000 for head of household filers, and 160,000 for married filing jointly. These economic impact payments are not treated as a taxable income. Back to you, Bhakti.
Thank you so much, Hansa. I'm sure the stimulus payments that the government has been providing for the last whole year has been really helpful to the small taxpayers. It really helps. Thank you for that, Hansa. Hansa, the ARP also includes some great tax savings for individuals. Can you please walk us some of them?
The ARP Act temporarily expands and otherwise modifies the certain tax credit, including the child tax credit, unincome tax credit, and dependent care credit. The maximum child tax credit is temporarily set at $3,600 for each child younger than 6 years old and $3,000 for other qualifying children. It begins phasing out for the individual parent earning more than 75,000 and couples making more than 150,000. For the year tax 2021 taxable year only, the child tax credit is made fully refundable for the taxpayer with the principal place of residence in the United States for more than one half of the taxable years. So Bhakti, that's about the tax benefits for the individual.
Thank you, Hansa. So the government is looking after the individuals, businesses. It's a really good step and helping all these businesses and individuals survive. You know, Paycheck's protection program, which has been one of the most popular programs during the entire year. There are new exciting provisions under this loan as well. Neha, what are they? What changes has the ARP brought to the new PPP loans?
Thank you, Bhakti. Hello, everyone. So, Bhakti, as you rightly said, it's a very exciting program. Personally, I believe that it is one of the very crucial benefit that has been offered in the relief packages so far. I believe that it has helped so many small businesses stay afloat during these tough times. And on this note, American Rescue Plan Act has added $7.25 billion to the PPP lending again. And what ARP did was not only additional funding, but also expanded the scope of coverage for the PPP loan, which is again a very good step. When I said scope of coverage, it has actually expanded to cover certain non-profit organizations, which weren't covered earlier in the PPP regime. It has also covered certain internet publishing businesses, which weren't covered earlier again. Also, it expanded the scope in terms of eligible expenses. So there were certain eligible expenses for which you could use PPP order, like rentals, payrolls, interest on mortgages, utilities. But now they have expanded the scope to even include business software and cloud computing technology expense. And I personally think that's a great move because so many businesses use softwares nowadays, not only for the day-to-day operations, right? Be it running the payroll, be it managing inventory, be it managing supply. So I believe that this is a very good initiative and businesses who are eligible should certainly go out and apply for PPP funding before it gets too late. Thank you, Bhakti.
Thank you, Neha. Neha, I just heard you mention about new eligible non-profit organizations or some organizations. What type of non-profit organizations are now eligible for the PPP loans that were not there earlier?
Sure. So those newly additionally covered NPOs include labor unions, which were in there under 501c5. Then it includes those social recreation clubs under 501c7. That was like one of the most talked about thing. Then it also includes certain fraternal benefit societies under 501c8. Of course, they have their own eligibility criteria still. So for instance, you could not have more than 15% of your revenue coming from lobbying activities. You could not have more than 15% of your total activities comprising of lobbying activities. You could not have more than 300 employees per location. Also, you cannot spend more than $1 million in lobbying cost in the recent tax year before 15/2020. So with all these parameters, of course, you are eligible to qualify if you satisfy these requirements. And similarly, 501c3 charitable organizations and 501c6 business associations, they continue to be covered in the PPP regime. As always, just that ARP has allowed the 501c3 charity groups to even with as many as 500 employee per location. Before I conclude on the NPO expansion, the only thing that I want to clarify is that 501c4, which is staff welfare organizations, are still prohibited from the PPP regime. Bhakti.
Okay, thank you. That was informative. I'm sure many organizations will take benefit of this new provisions. Neha, this extension, is there any extension for the PPP deadline? Because, this law just got passed and what's going on with these due dates?
Yeah, so certainly there's an extension, and I couldn't agree more with those people who believe, wow, this is such a relief and a breather that, earlier the timeline to file the PPP application was until March 31, 2021. And it has been graciously extended by additional 2 months up till May 31, 2021. And I personally feel, yeah, it's a very good benefit, but still it is not a time to relax, sit back and relax, because we need to understand really what it takes to apply for a PPP loan. A, that there is limited fund and there are not many applicants. And of course, then there's a closing window. B, when you apply for PPP funds, when you make an application, what is that you need to complete by May 31? So you're not only done by just applying with the bank. You need to make sure that bank reviews your application, approves it, and submit it to SBA by May 31. So this is not a time to sit back and relax. I'll tell everyone, please approach your CPAs, please approach us, Chugh CPAs, trusted professionals to help you to be the front runners in the PPP application.
Yeah, Neha, I so much agree with you. PPP, though it seems straight and nice and simple, but it's not. You can do much more with the help of a professional. Thank you for that, Neha. Neha, EIDL, the Economic Injury Disaster Loan, they also have been expanded. What's on there? Can you please tell us?
So honestly, if you talk about economic injury disaster loan, EIDL, nothing has changed. You can still approach SBA and you can apply for those loans. Those are just same as any other business loan you take to run your business, right? But the difference has been that you remember in December bill, there was this EIDL grant, an advance grant one time of 10,000 per employer that was extended. But most of the, because that fund got exhausted very soon, so some of the businesses could not get it. What ARP has done is ARP has added money to that EIDL grant pool. Okay, and they even call it like targeted EIDL grant, because the intent of adding fund to that grant pool, which is not a loan, again, is to help those small businesses which either did not qualify in the first round to get that, or did not get it fully, or they've suffered huge business losses, or they are in those low income area groups. And also the thing that we need to understand here is that EIDL is not something that you could apply for. It is something that SBA will reach out to you if they believe that you qualify for the EIDL grant.
Oh, interesting. That's something very important that the appliers should keep in mind. SBA will reach out to you. Neha, what if they have not applied earlier? They can make a fresh application?
For EIDL?
Yes.
So for EIDL, there is so EIDL, there are two components, right? One is loan and one is grant. So for loan, you can apply even today. It's like a business loan. Okay. You can apply directly through SBA, and for grant, you don't have to apply again. It is SBA who will figure out if you're eligible for this targeted EIDL grant, which has been funded by AR.
Great. Thank you, Neha. ERC, Employee Retention Credit, the most talked about new changes. Neha, can you please tell us what are those certain expenses for ERC? Can you tell us something more about ERC? It's the most talked about credit with the ARP.
So I personally believe, Bhakti, as you rightly said, most talked about, this is one of my favorite as well, honestly, because employee retention tax credit can just be very useful for businesses who have graciously retained the employees during these tough times and have struggled to meet the payroll expenses, the tax payments. So just to bring everyone on the same page, I will just summarize what employee retention tax credit is to begin with. So it is a tax credit that is offered in general to any employer with 500 or fewer employees and who have a calendar quarter revenue loss as in revenue dip of 20% or more vis-a-vis and comparative quarter in 2019. So in short, if in quarter 1 2021, you see that your revenue is off by 20% or more vis-a-vis a comparative quarter of 2019, and you have employees less than 500 or 500, then you're eligible to claim employee retention tax credit, period. And I believe the way it works, I believe it is good that every business should take it, because this is a very gracious benefit that has been extended and one should take it. I'll tell you via example why. So if you have a payroll tax, since it's a tax credit, of course, so you can only claim this against the tax payments, right? So if you have a payroll tax liability of 10,000 or more per employee per calendar quarter, then you can claim 70% of the payroll tax per employee per calendar quarter as a tax credit. So assuming that you have the 10,000 of tax liability per employee, you can actually claim 7,000 per employee per quarter. So just think about it. If you have 10 employees, you can actually claim 70,000 per quarter. Isn't it a huge amount? Yeah. Now, what ARP did was two good things that ARP did. One, that they have extended the timeline for this credit from June 30th, 2021 to December 31st, 2021. So earlier it was only allowed for quarter 1 and quarter 2 of 2021. Now it is even allowed for 3 and 4. So what this has done is that you have this allowed all through 2021. Just go ahead and claim it. And the second part that they did good is that a lot of businesses who were startups in 2020 had no presence in 2019, the base year. They were struggling to figure out. They weren't eligible in the earlier with the employee retention tax credit. Now they have been also brought in this ambit. So new startups who have been set up after February 15, 2020 are very much eligible for this credit, provided they have their gross receipts up to $1 million. So this is a very good credit that all the businesses should really apply for if they qualify. And I just want to clarify here that again, this is not a loan. You cannot go and apply. In fact, you have to approach your accountants, your payroll consultants to make sure that every quarter this is rightly claimed. And this can be a huge benefit for every businesses. ARP has also, just to add on, ARP has also allowed even companies with more than 500 employees to claim this credit only for the furloughed employees, or if they're severely financially distressed, then it's for all employees. Now, the way they have defined severely financially distressed is that if your any calendar quarter revenue is 10% or gross receipt, is 10% or less vis-a-vis your comparative quarter in 2019, then you are actually financially distressed and you can claim it even if you have more than 500 employees.
That's great news, Neha. It's amazing. So rightly said, approach your accountants, make the right decisions to maximize benefits wherever and everywhere possible. Thank you so much, Neha.
Thank you.
So moving on, there has been extension for tax credits for family and sick leave. Employers can now claim more credits on the paid family and the sick leave, thanks to the ARP. So Paul, what are some of the details on that?
Thank you, Bhakti. That's correct. The American Rescue Plan Act has expanded the eligibility for paid family and sick leave. The first thing to note is that the American Rescue Plan is not requiring small businesses to provide paid family and sick leave as required under the Families First Coronavirus Response Act that was passed last year. However, it is providing for tax credits to employers who voluntarily provide paid leave to their employees between April 1st and September 30th, 2021. Another change from the original program is that there are additional reasons that qualify for paid leave. For example, getting a COVID-19 immunization or recovering from one, or obtaining or awaiting the results of a COVID-19 test or diagnosis. Additionally, the Act increases the total number of days of eligible paid family leave from 10 weeks to 12 weeks. This increases the total amount of wages eligible for the tax credit from $10,000 to $12,000. The additional 2 weeks of paid family leave and $2,000 of increased tax credits are available for leave taken between April 1st, 2021 and September 30th, 2021. Additionally, if an employee has already taken 10 days of paid emergency sick leave, the American Rescue Plan allows employers to claim tax credits for an additional 10 days of paid sick leave for that employee starting from March 31st, 2021. An important point to note is that employers are only eligible for these tax credits if they apply voluntary paid sick and family leave policies in a neutral and non-discriminatory manner. Both the paid family leave and paid sick leave credits can be used to offset federal payroll taxes. The credits can either be claimed as an advance payment or when filing the quarterly payroll tax returns. Back to you, Bhakti.
Thank you so much, Paul. So now some of the business may not be really aware about the short time consideration programs, STC, which can be a good alternative to laying off employees. So Paul, how do the STC programs work?
That's right, Bhakti. The American Rescue Plan contains provisions intended to encourage employers to enact short-term compensation programs in lieu of laying off their employees. How this works is that the employer will continue to pay its employees for reduced working hours and partner with the state, which will provide partial unemployment benefits for that reduction in hours. This allows the employer to avoid layoffs and retain their trained employees to quickly recover when business conditions improve. In order to take advantage of this program, employers will need to reach out to the respective state's unemployment department to set up the short-term compensation plan. Currently, there are 27 states that have programs that meet the requirements of the federal law. In order for an employee to qualify, the employees must otherwise be eligible for unemployment benefits. However, the employees would not be required to meet the work search requirements but they would be required to be available for their normal work week. Employees may be required to serve a mandatory unpaid waiting week depending on the state unemployment department. The American Rescue Plan achieves all of these benefits by extending the federal reimbursement provisions in the CARES Act and permitting states to receive reimbursement for 100% of the unemployment benefits that are paid pursuant to these short-term compensation programs up through September 6, 2021. Employers should coordinate with their respective states to facilitate approval of their short-term compensation plans for their employees. Back to you, Bhakti.
Thank you so much, Apol. Now, the ARP Act brings along an exciting new grant program specifically for the bars and the restaurants, the most affected industry with the pandemic. Satya, what exactly are the restaurant revitalization grants under the ARP?
Sure, Bhakti. Hello, everyone. Yes, the Act established our RRG program, Restaurant Revitalization Grant Program. So this program is mainly to assist restaurants who suffer losses during 2020 and especially during this pandemic. So this Act set aside 28.6 billion in total grants, and out of that $5 billion has been reserved for entities with revenues of less than 500K. So the first preference is given to smaller restaurants with revenues of less than 500K. But the main issue is the CSBA has not yet finalized the regulations yet. I think we are expecting these final regulations soon, probably this week or next week. And once SBA finalizes the regulations, I think restaurants will have a month period to apply for the program, and they'll get the grant. So yeah, even though the final rules are not out yet, but we can expect a grant amount of amount equivalent to the difference between 2019 and 2020 gross receipts, with a maximum loan amount of $10 million. That's for the entire group. But for each physical location, the maximum amount is $5 million. But if the restaurant takes PPP loan, the amount of PPP loan will be reduced from the grant amount, and the remaining amount only will be given as a grant. And the usage is for all eligible expenses. Again, we are waiting for the SBA guidelines, but our expectation is that you can expend this for payroll, inventory, any supplies, payment to the contractors, and any necessary expenditure. And the amount has to be incurred between February 2020 till December 2021. So once you meet these conditions, any restaurant is eligible for grant. Over to you, Bhakti.
Thank you so much, Satya. Similarly to the grants available for the bars and restaurants, there have been new grants available to certain entertainment organizations. Satya, could you please provide some background on the Shuttered Venue Program grant?
Yes, Bhakti, this is another program. This benefits for a lot of entertainment organizations, whether they are into motion picture theater operations or live venue operations or art organizations, theoretical producers. So any of these entities, which are into operation as on February 29, 2020, they are eligible for this grant. And the main condition for this is they have to have 25% reduction in the gross revenues between the respective quarters of 2019 and 2020. So once any business meets these conditions, they are eligible for this grant. And actually, this grant is open, and you can go to SBA website and apply. As I said, the entertainment organizations are eligible, and the eligible amount is divided into two categories. For the businesses which are into operation before January 2019, they get a maximum amount of 45% of revenue as a grant, and those businesses which are into operation after 1st January 2019, they get 6 times of their monthly revenue as a grant. And each business has to look into their eligibility criteria, and then certainly can go into the SBA website and apply. And again, if any entity has already taken PPP, then there is no double dip. So the PPP amount has to be reduced from this grant, and the remaining amount is given as a grant. Back to you.
Thank you so much, Satya. So, listeners, there are so many new things happening around the PPP and the restaurant revitalization grants, stimulus packages. Lot of data, lot of information, but lot of benefits. Please try to take advantage of the benefits that the government is providing. Do it rightly, approach your CPAs. This brings us to the end of our presentation today, but we still have time for Q&A. If you have already not asked your questions, please feel free to post them in the chat window. I'll just go through some of the questions that we have received so far. I see one of the questions, Neha, this is regarding the EIDL application, I believe. Our application was denied in 2020. Can we reapply? Neha, can you please help us with that?
Yes, of course. I mean, if it's EIDL, we can always, we might have to look into the case, why was it denied earlier, but we can always considering the business situation, right? The business scenario keeps on changing, requirement changes, there's so many changes. So based on the revised, updated scenario situation, we can always reconsider and apply. Why not?
That's great. And the way you can do that, you can apply to pdc at recons.com. .gov, there's their email ID that they've given, and you can definitely go and ask and reapply, provide the necessary documents, and they can do it. Thank you so much, Neha. Yeah, so I have one more question for you. The question that is asked here is, I am a sole proprietor with no employees. My revenue last year fell by over 50%. I have been turned down for PPP loans several times. Has there anything changed for me so that I can get a PPP loan? This is the question. Do you want me to repeat it?
No, I get it. I mean, I'm just trying to understand that we would certainly need more details in terms of the fact, despite being a sole proprietor, has he been making any money from payroll, running a payroll for his company or not? And there might be other follow-up questions to see why was it rejected earlier. Certainly, just being a sole proprietor is not the only criteria to reject him from PPP. So we can look into the details and, of course, help him get the PPP if he qualifies and meet all the requirements. Despite the rejections previously, that doesn't matter. If he's eligible, he's eligible. We can look into it.
Okay, perfect. Thank you so much, Neha. I have one question here which says that if I earn 75,000 and my husband earned 200,000, am I still eligible for the federal tax-free 10,500 limit? I think, Hansa, you can help me with this.
Thank you, Bhakti. Yeah, so under this ARP Act, 150,000 limit is like a individual limit. It has nothing to do with the like a combined limit, like a single tax filed or the merit filing jointly. So definitely you can get the benefit of a 10,500 deduction.
Thank you so much, Hansa. Hansa, I won't let you go so soon. I have one more question for you. The question is, I already filed my tax return. Am I eligible for this 10,500 limit, and how should I proceed?
Yes, so under ARP Act, you can claim the like a federal tax-free this income. So you can go ahead and work with your tax preparer to amend your tax return, and whatever tax you have paid on this 10,500, they will refund you the money. So you can go ahead and amend your tax return for 2020.
Great, thank you so much, Hansa. I see a follow-up question being asked on how do I reapply? Well, please say where to reapply. Okay, so the email address where you can reapply is pdc.recons, RECONS @sba.gov. Please provide background, your application number, your reference reference letter, and the details why you think you should be eligible. You should hear back from them. There may be a little backlog, but they'll get back to you. Hope I answered your question. Moving on, I have another question. Can I take PPP loan and ERC both? Neha, you can help me with that?
Sure. So as Satya also mentioned, right, if you, for restaurants and all, if they get grant, you still have to reduce PPP. So the entire intent of the relief package has been all through that you cannot get $2 for a $1 expense, correct? So considering that in mind, of course, you can take PPP and ERC both, but not for the same expense. So that's what I tell my clients, that for instance, if they've got PPP for June and July, they can still use ERC from August onwards. So there's nobody stopping them, but not for the same expense, certainly. No double dipping.
Great. So yeah, we should try to maximize wherever we can, right? We need this. Business needs to survive. So Neha, that's good news. Thank you. I still haven't received my stimulus payment. This is another question. How do I get it? Hansa, can you please help me with this?
So for 2021 stimulus third payment, which IRS has released, most of the taxpayer has started receiving. If you don't have your some information with your bank or something is wrong with your bank, they will consider to send you a check or they are sending the debit cards. In case if you don't receive by end of the year, IRS gonna allow the way they allowed for a 2020 stimulus package. You can claim as a credit while filing your 2021 tax return, considering your income limit stays same like a below 80,000 and the merit filing jointly below 160,000.
Thank you so much, Hansa. Sukhpal, you can help me with this one. Which states offers the short-term compensation plans?
Yeah, so there are currently 27 states that offer the short-term compensation plans. Currently, the list that I have is Arizona, Arkansas, California, Colorado, Connecticut, Florida, Iowa, Kansas, Maine, Maryland, Massachusetts, Michigan, Minnesota, Missouri, Nebraska, New Hampshire, New Jersey, New York, Ohio, Oregon, Pennsylvania, Rhode Island, Texas, Vermont, Washington, and Wisconsin. You'll want to be sure to contact the employment or workforce department in the respective state to inquire about signing up for a short-term compensation plan, and the requirements will vary from state to state.
Thank you so much, Sukhpal. Sukhpal, we are in California. I'm sure many of our listeners will want to know about the short-term compensation plan in California. Can you please give us something on that?
Yeah, absolutely. In California, in order to qualify for a short-term compensation plan, first of all, the employer has to, of course, be registered with the EDD and paying wages in California. And the employer must have at least 2 employees, and the reduction in wages in order to qualify for the short-term compensation plan would have to be between 10 and 60%. In addition, any health and retirement benefits that the employer is providing to the employees, they must keep those benefits the same, even though that the hours are being reduced for the employees. There are some additional requirements as well. If you have any further questions as you're kind of contacting EDD, if you're curious about how it works, feel free to reach out to one of your trusted Chugh advisors.
Thank you so much, Sukhpal. I see one more question. Considering the restaurants have their own set of relief packages available, do you think they should still consider PPP? Neha, I think you can help us with that question.
I would say, of course, why not? I mean, why would you not consider PPP if you're eligible? Because ultimately, if you use it for the eligible expenses, it will be 100% forgiven. I think every business, irrespective of getting individual industry specific benefits, should still consider PPP because that's one of a core benefit, which is even forgivable if used rightly.
Great, thank you, Neha. Hansa, one question that I see for is child tax credit. When can I get the child tax credit of 3,600?
You can get that credit while filing 2021 tax return.
Great. Thank you so much. Sukhpal, for paid family and sick leave, is the employer required to provide both the paid family leave and the sick leave, or can it choose to offer one over the other, or the other only?
This is an excellent question. So it's not quite clear from the legislation. So we're still waiting for some additional guidance from the Department of Labor. But based off of kind of how it's written, our recommendation for now is that the employer should provide both the family leave and the sick leave until there's further clarification from the Department of Labor.
Great, Sukhpal. So, Sukhpal, which employers qualify to provide leave under the new law?
So this is the same kind of requirement as it was before. So employers must have 500 or fewer employees in order to voluntarily participate in this expansion of the paid family leave and sick leave credits.
So, Paul, this is really interesting to me. I'm going to ask you a couple more questions.
Sure.
What's the maximum amount of the credit for the paid family leave?
So the maximum amount of the credit is going to be up to 2/3 of the employee's regular pay, and that's going to be limited to $200 per day. So the total amount of credit that an employer could take for an employee is up to $12,000. That's basically $200 a day for 5 days a week for up to 12 weeks.
Great. And how about the paid sick leave? Maximum amount there?
Yeah, so this is going to be the full amount of the employee's regular pay is eligible for paid sick leave, and the maximum is going to be capped at $511 per day. And the total amount that can be taken for the period of April 1st through September 30th is going to be $511 per day for up to 10 days. So that maximum credit available would be $5,110.
Great. Thank you so much, Supal. So thank you everyone so much for joining us today. For any other questions or to schedule a consultation, please send us an email at info@chugh.com or email one of our presenters directly using their contact information on the screen. We also have live webinars each month and other COVID-19 resources for small businesses. Please visit our website at www.chugh.net. That's CHUGH to register for an upcoming webinar. We also recommend you to subscribe to our YouTube channel, Chugh LLP, for great new business content. Again, thank you all very much for joining our webinar today. We wish you a safe and a happy week ahead. Thank you so much.